Tuesday delivered the first decisive sell-side rotation since the April low. ES closed at 7,171, down 34 points, after rejecting Monday's all-time high at 7,223. The session printed a 64% closing range, neither capitulation nor accumulation. This reads as orderly distribution into what may be the most consequential 24-hour window of the quarter. Three drivers dominated the session. First, tech-led selling, as renewed AI spend skepticism hit mega-cap names ahead of Wednesday's earnings. Second, crude oil breaking above $100 on massive API inventory draws, raising sticky inflation fears. Third, pre-FOMC positioning, as traders squared up ahead of Wednesday's rate decision and Powell press conference. Cross-asset signals tilt cautious tonight. VIX held flat at 17.84 despite the sell-off. The dollar firmed to 98.6. Gold dropped nearly 2%, while crude surged 3.4%, breaking triple digits. Energy above 100, plus tight inventories, plus extreme bullish single-stock positioning is the constellation that produces violent risk repricing if a hawkish catalyst lands. Real-time hedging flow closed at plus $3.8 billion, rebounding from negative $1 billion during the intraday sell-off. The options flow showed aggressive put selling near the 7,135 and 7,140 strikes into the close, a bullish positioning signal. But the dealer positioning stability reading sits at just 19%, which means a significant move is coiled. The gamma environment is critical to understand tonight. The primary gamma concentration strike sits at 7,000. The volatility inflection level is at 7,095. The dealer gamma flip level is at 7,025. We are trading above all three, which means hedging flows currently dampen moves. But the stability reading at 19% tells us that equilibrium is fragile. One catalyst can shift the environment overnight. The FOMC rate decision drops at 2 p.m. Eastern, followed by Powell's press conference at 2:30. The consensus expects a hold at 3.75%. The trade is not the decision itself. It is the language. Triple-digit crude plus tight inventories means Powell is unlikely to declare victory on inflation. Any explicit reference to energy costs as a forward inflation risk will be received hawkishly by markets. Immediately after the close on Wednesday, 4 megacap names report earnings. Amazon, Google, Meta, and Microsoft collectively represent 22% of the S&P 500 weighting. AI spend commentary on the earnings calls is the second major catalyst. The correlation index sits at 9, meaning traders are aggressively bidding single-stock calls while selling index volatility. That is an extreme risk-on stance that amplifies the reaction to any earnings disappointment. I see 4 probability paths for Wednesday. Path A, at 35%, is a pre-FOMC drift. ES holds 7,148, grinds into 7,180 ahead of the decision. Balanced Powell closes near 7,170. Path B, at 30%, is a hawkish surprise. Powell flags energy and sticky inflation. We sell through 7,135, tag 7,115 to 7,090, close near 7,100. Path C, at 25%, is a dovish bounce. Soft durable goods data plus dovish Powell drives a reclaim of 7,200 and a tag of the all-time high at 7,224. Path D, at 10%, is an earnings-driven gap. The earnings reactions overwhelmed the FOMC move, producing a 50-plus point gap on Thursday's open. Here is how I see the day unfolding session by session. Overnight will be mixed and defensive in a 7,140 to 7,200 range. Pre-market gets driven by 8:30 durable goods data. The morning session establishes the initial balance. Then from 11 a.m. to 1:30 p.m., expect compression as traders square positions ahead of FOMC. The 2 p.m. to 3 p.m. window is pure whip risk with a potential 150-point range. Post-FOMC through the close should see trend continuation, and then earnings drop at 4 p.m. Wednesday's economic calendar is stacked. At 8:30, durable goods orders, building permits, and housing starts. At 9:45, Bank of Canada rate decision. At 10:30, EIA crude oil inventories. Then the main event, 2 p.m. FOMC decision, 2:30 Powell presser. And after the close, Amazon, Google, Meta, and Microsoft earnings. On the resistance side, the first barrier is 7,180 to 7,185, where the previous day high and initial balance high converge. Above that, 7,193 is the implied one-day move high. The critical wall sits at 7,200, where the options call wall aligns with the 1 standard deviation pivot. And the ceiling is the all-time high at 7,217 to 7,224. On support, 7,166 to 7,168 is the daily pivot and yesterday's point of control. First real demand sits at 7,148, which is the 1 standard deviation support plus the overnight low. Below that, 7,135 to 7,138 is structural support at 2 standard deviations. If we lose that, 7,091 to 7,095 is the volatility inflection zone. And the final backstop is 7,000 at the primary gamma concentration strike. The primary setup for Wednesday is a long ES entry in the 7,148 to 7,154 zone. Conditions require a constructive 5-minute reaction at the demand zone, a rejection wick with decreasing volume on the test. Stop goes at 7,135, below the 2 standard deviation support. Target 1 is 7,176. Target 2 is 7,193. Target 3 is 7,200. That gives approximately 3-to-1 reward to risk to target 2. The alternate setup is a short ES from a rejection at 7,193 to 7,200. This only triggers on a hawkish FOMC reaction with explicit energy inflation language, plus a 5-minute close back below 7,193 with negative breadth confirmation. Stop at 7,210. Target 1 at 7,166. Target 2 at 7,148. Target 3 at 7,135. This is a reactive setup, not anticipatory. Only enter after 2:30 p.m. with confirmation. Invalidation conditions to watch. A 30-minute close above 7,210 on expanding volume neutralizes the short setup and reopens the all-time high test. A daily close below 7,135 confirms the ATH rejection and exposes the 7,090 risk pivot. And a sustained break of 7,090 opens the door to 7,000. Position sizing into the FOMC pivot should respect the asymmetry. Any single direction conviction prior to 2:30 p.m. Eastern is misaligned with the day's risk profile. The 7,148 to 7,200 corridor frames roughly 80% of likely outcomes. Scale half position pre-FOMC, half after the dust settles on the presser. Cut to half size if the statement reads HOWIS. The constellation of signals tonight describes a maturing late-cycle rally where pullbacks are still bought, but supply concentrates heavily above 7,200. The cleanest scheduled mover is the FOMC at 2 p.m. The fat tail risk is 4 megacap earnings immediately after the close. Manage size, respect the levels, and let the market tell you which path it chooses. If this analysis added value, subscribe and hit the bell for daily institutional grade setups. I will see you tomorrow evening.